Hello and welcome to the Business of Blockchain. I'm Nisa Amoyals. This special episode focused on a blockchain use case is sponsored by Bitdeer. Today we are talking about tokenization of real assets. Our guest is Keerthi Moudgal of JP Morgan, where she is head of product for Onyx Digital Assets. Welcome, Keerthi.
Thank you, Nisa. I really appreciate the opportunity to be here today.
So Jamie Dimon is against Bitcoin, but for blockchain. Tell us a little bit about what you're building at JP Morgan.
Yeah, thanks, Nisa. We get that question a ton, but we've actually been working on blockchain technology since 2015. And right now, where our blockchain efforts predominantly lie are in live products centered around payments. So we have a product called JP Morgan Coin, and centered around digital assets. Within the Onyx digital asset space specifically, we'd actually launched back in 2020 and have transacted around $1 trillion worth of trade notional since across our first use case, which centers entirely around intraday financing, or bringing treasuries onto blockchain networks in a tokenized manner, and then allowing the holders of those treasuries to access a form of liquidity they didn't previously have access to. The second use case that we then went live with on the Onyx Digital Assets platform was all centered around streamlining collateral operations and enabling holders of assets that may have previously been considered trapped or hard to mobilize or hard to use in some capacity, enabling those investors to use those assets as collateral for margin-related transactions or other types of collateral events. And the asset that we first took live within that particular use case was money market fund units, which are easy to invest in, but actually hard to use. And then as we continue to think about the development of Onyx Digital Assets, it really comes down to expanding the sets of asset classes that we bring onto the platform. So thinking about mortgage-backed securities, thinking about in a future state equities, thinking about alternatives, as well as expanding the sets of use cases that we can bring onto the platform that we can also bring onto the platform. So if that's issuing bonds natively onto the blockchain network, if that's enabling fintechs and third parties to develop applications directly on this platform, we really see scale moving in those two directions.
Could be real estate too.
Could be real estate.
So what are tokenized assets?
Yeah, definitely. So tokenization for us basically means the representation of traditional assets in smart contract form. And effectively, once you're able to recognize a traditional asset in smart contract form, what you can do is apply a layer of programmability in terms of how that asset is record kept from participant to participant as it exchanges hands. And that significantly reduces the operational complexity of investing in, of holding, and of utilizing that asset for both JP Morgan as well as our clients.
And so who are your clients and how are they using this now?
Yep, so our clients are typically large asset managers, broker-dealers, financial institutions that meaningfully participate in financial markets today, who all recognize that there is a better way of transacting with one another that can allow for the greater flow of liquidity through our financial system, as well as increased utility of a variety of different asset classes.
So the JP Morgan blockchain is private, permission, but it was a fork of Ethereum. So how is it different?
Yeah, so I'll just take a step back. So Onyx Digital Assets itself, as a technology platform, leverages an instance of Quorum. And Quorum is an EVM blockchain that, as you rightly point out, Nisa, when it was developed, forked the Ethereum code base and added on a layer of permissioning so that effectively an operator of the network could ensure that the only parties that were able to join and transact are known KYC'd institutions, and a layer of private messaging so that certain types of transactions could not be visible to all who participate in the network. And we really see, both privacy as well as recognition of who you're transacting with to continue to be institutional needs that must be met in order for the likes of JP Morgan and our clients to be able to transact on these types of networks.
So what is the Onyx user experience like? Are they using a wallet?
So today, the way in which our clients interact with us is actually quite similar to the way in which they interact with JP Morgan products in a Web 2 based world. We abstract away some of the complexities around interacting with blockchains, such as running a key management solution or interacting with a self-custodial wallet, so that as we're onboarding clients into our ecosystem, they are more comfortable with exactly what it is that they're transacting with. We see a future state where eventually user experiences may evolve such that clients are running their own infrastructure in order to connect into these networks and transact. But whether that looks like wallets as we understand them today or some type of more streamlined experience in the future, I think we're yet to see. But I think just to round out the question, when a client is interacting with Onyx digital assets today, they're basically logging into a web-based user interface where they're able to access an application for secured financing or an application for streamlined collateral processing, and therefore access the wealth of assets.
And they don't even know they're using blockchain.
They don't even know that they're using it.
And so in a recent report, you talked about the tokenization of funds. How are funds using the benefits of blockchain now, the immutability, the transparency, and is there like a before and after scenario?
So the problem that exists with the fund management space today is that there is a lack of standardized infrastructure and a lack of data standards, which means that when fund managers, investors, wealth managers, and admins, all the participants in the fund ecosystem need to interact with one another, there's a lot of room for error and there's a lot of need for mass reconciliations. And so the way in which we are working to address this challenge is by basically providing a unified layer, which is Onyx Digital Assets, atop of which each of these participants would interact. Fund managers would be able to deploy their fund assets onto the platform, and investors would be able to easily interact with, access, and invest in those funds. And we really see this as a foundational step in terms of what tokenization can bring to the fund management space. Tokenization alone does not mean that there will be, greater capital invested in funds or greater access of funds to a more distributed set of investors, but it is the first step that the industry can take towards getting to a future state where we can open up newer types of products or newer types of channels that then can allow for capital to flow into these ecosystems.
And BlackRock's Larry Fink recently made headlines when he talked about the Bitcoin ETF and that being just the first step in terms of tokenization of assets. Are you working with BlackRock?
We are working with BlackRock. We did announce in October of last year that they were our primary client or initial client for the application that we released all around streamlining how collateral moves from providers to receivers. In that particular use case, and I think that tie back to BlackRock there, we were able to leverage tokenization to allow for money market fund investors to use their shares as payment for their margin-related activity. Previously, prior to this solution, utilizing a share of a money market fund for collateral needs is extremely operationally complex. And so what we do with our solution is abstract away some of those complexities and allow for that share to be leveraged from provider to receiver.
So is there any US regulatory unlock that we need to happen for this to really be realized in the future? Or like what message would you give to US lawmakers?
I think having a bit more of a, call it a regulatory sandbox or call it a defined set of rules around which institutions are a bit more clear in terms of how they can meaningfully participate in blockchain ecosystems or utilize blockchain ecosystems or understand what problems they need to address before that type of activity takes place. I think any sort of clarity and then test environment for that can definitely help institutions, I think, enter the space in a more, sound manner.
What do you hope you can accomplish ultimately here?
I think when I think about the potential for Onyx digital assets and the potential for tokenization in this space, the ambitious answer to that is really in redefining how financial ecosystems operate, that allow for more open access, that allow for more innovative products, and that allow for a world in which we can transact with one another that we haven't currently imagined for ourselves today. So it's kind of a roundabout answer of saying the end game that I hope we reach is one that I currently can't envision, but is one that I think as we continue to break away at some of these operational challenges within the financial landscape, those opportunities of what we could theoretically unlock become a lot more clear.
Super exciting, and thank you so much for coming here today and sharing this with us.
Thank you, Nisa.
And that's it for today's edition of the Business of Blockchain. This special report highlighting a blockchain use case was sponsored by Bitdeer. I'm Nisa Amoyles at the NASDAQ Market Site.